about. Now, concept-wise, like what you said, we can find it easily online. That's the Warren Buffett way of investing. However, what's missing is that what is the process, exactly the process to go about it? I think that's the secret sauce of the investing, right? It's the process. So I was fortunate enough to to find something that years ago learned about it and then practice it consistently, and it's starting to yield results, really good results.
Mhm. You mentioned the secret sauce, and you're not gonna give us the secret sauce?
Well, not true. I think the more than happy to. I think the reason that I set out to, teach other in the program, I'm more taking the approach of sharing, right? I don't know much about teaching, and actually it all started as sharing with some of my friends and ex-colleagues and even ex-clients, corporate clients turned to personal friends and asked me to, share with them how I do it. And so I would say it's not secret. More than happy to. In fact, I want to help other people learn how to do it, empower everybody learn how to do it. It's rather simple. Every time when you hear Warren Buffett or the late Charlie Munger, right, his ex-partner who passed away almost a year ago, and they said, you know what, investing is very simple, but not easy. Not easy. The not easy part is because number one is human psychology, right? Number two is we're living in a very complex world, especially in the financial market, the capital markets. There are a lot of noise that drag us away from the true investing. So, but the process, the so-called secret sauce, is rather simple. In fact, in my program, I told a real life story. A class of grade 7 students in a junior high school just outside of Boston. The teacher want to prove to the world that it doesn't take an MBA degree to be a good investor, right? Especially in Boston, you're right next door to MIT and Harvard, right? University. So the teacher of this grade 7 class, basically, she want to prove that. So she teach her class how to invest. Grade 7 kids, 13 years old, right? Long story short, and I have the detail in my program that after 2 years, this class of kids, grade 7 kids, outperform S&P 500 by more than 25%. Okay, and in fact, they outperform 90% of all equity mutual fund on Wall Street. Can you believe that? Now, this is true story that you can actually Google on, it still show on Wall Street Journal and on NASDAQ publication and many others. And in fact, they attracted the attention of, at the time, the most successful mutual fund manager, Peter Lynch, and invited teacher and the class to his headquarters, Fidelity Investment headquarters, for lunch, and even follow them on a field trip to learn about how they actually do their investing research. Okay, so investing could be rather simple. It all boils down to a few key process, which I can share here. Otherwise, it will take multiple days, and that's what my program's about. It's all about finding good business. Okay, and of course we will talk about what's defined as great business, right? Wonderful business. And the business that I would target at least double-digit growth, right? Mid double-digit growth, right? Lower than double-digit is not worth our time, our money. It's not, getting the growth that we are targeting for. Too high, that means, our world always, very fair. Higher reward, higher risk, right? So we want to be safe. We want to be, again, number one rule is protect our capital, right? So finding good business, that's the number one step, right? So how to find them, how to analyze them, the qualitative assessment of a business, including their management team. That is very important because any good product, good service, good business is a byproduct of an excellent executive management team. So it's very, very important because at the end of the day, we're giving our hard-earned money to somebody we don't know, right? And hoping that they would grow it and return, right? Return the capital plus profit, right? And then the next step is knowing how to value it. Buying something, we want to know the value, not just the price, right? Price is what we pay, but value is what we get, and they're not equal. So it's very important to know any good business that we're interested in investing in and knowing how much they're worth. So that's a big part of how to evaluate. There's no difference than, us investing in real estate, right? We want to find a good property, a great asset. And what classify as a good asset, right? We want to look at the location, the demographic in that neighborhood and the potential and all that, surrounding business and employment opportunity, etc. Right? So those are all the qualitative analysis. And then, okay, when it's good, what do? We go through the underwriting process, all the number, right? How much is it worth? You know what? It's the same in equity market investing. I'm not talking about trading, right? Trading, speculating, a lot of them are trading on momentum. I can touch on that, why I always, I'm not against trading, but I always tell people that don't trade, invest, and there's a big difference. So anyway, I digress and back to that. And once we know how much the business is worth, then we know how much we're willing to pay for it, right? Well, many investors, including myself, before I learned this was okay, because on TV, this analyst said it's going to go up, it's good, so we chase it, we buy it, right? So if you remember a couple years ago, right, GameStop, GameStop, and all the way from $10 to like some $400, and people chase it. And so I tell people, okay, once you know how much, then you can decide how much you want to pay for it. The higher you're willing to pay, that means the higher risk of losing money, losing capital, right? The Charlie Munger way is paying a fair price, and Warren Buffett advocates that margin of safety, paying a discounted price. So I think that's part of the process. And then the next step is how to get to those price, and knowing what we want to pay, then you just keep it on the watch list, and there will always be opportunity because the market always go ups and down, right? Come in cycle. And at the end of the day, as long as the business is still good, no difference than you buying a restaurant's business, let's say a coffee shop business. As long as the business, the thesis is still intact and still good, you hold on to it and let it continue to grow and take profit, right? As the business continue to grow, profitability continue to go up, cash flow and earning coming in, the value of the business will keep on going up. And there's no reason to just trade it, right? You just hold on to it. But it does require the temperament, like the patient, right? And also involvement as well, basically staying in touch with what's going on.
Right.
So I would say, in a nutshell, that's the so-called secret sauce. It's not so much of a secret, but it's really knowing the step-by-step process.